talks about the crisis. Qantas has revealed that shocking full-year loss of $2.8 billion. The result is far worse than the $800 million loss most analysts were predicting. The result comes just months after the national airline announced 5,000 job losses over the next 3 years to rein in costs. Now here's finance reporter Alicia Barry with more analysis on that Qantas result.
Thanks, Joe. Shares in Qantas have jumped 8% despite the company posting that $2.8 billion loss. The big blow to the bottom line result was a $2.6 billion non-cash write-down of the value of Qantas's international fleet as the company moves to split that unit into a new corporate entity. The figure is a big turnaround from last year's financial result of a $1 million profit. Now, excluding those write-downs, Qantas posted an underlying loss before tax of $646 million, which was also worse than most analysts expected. The underlying loss reflects the fact that the airline's poor performance is not solely due to those big fleet write-downs. For more on the result, I'm joined by Evan Lucas, equity strategist at IG Markets. Evan Lucas, thank you. Now, investors seem to be looking past this bottom line loss.
They certainly are, Alicia. And look, the reason for it, there are several things to have a look at. If you do look at the underlying numbers, the $646 million loss you just quoted is actually better than what most people expected, according to Bloomberg. They have an actual figure of 763. And what you need to look into that is that depreciation was going to be a big headline figure. It's not as bad as expected. Staffing costs and staffing restructure also wasn't as bad. But I think what you need to look at is what's going on that international spin-off. That's a very, very interesting development. It shows two things. It's going to ring fence out its worst performing division. It made a $497 million loss on its international business from $242 million loss last year. And it therefore means that international foreign investment can come in, but it won't dilute its very profitable domestic business and keeps that at arm's length. So I think that's part of why the market is actually quite appreciative of this change. It certainly shows a step forward, and it is also a very big clearing of the decks number. I'm not saying it's a good thing. It's certainly a horrible result on the headline numbers, but the market reaction thinks forward, and the clearing of the decks, the international business spin-off, looks quite positive in terms of FY16 and 17.
Okay, so you think this international spin-off may actually work for Qantas and we might see it return to profitability as Alan Joyce is hoping?
I'm very careful about how I sort of word that, and the reason for it is that there is still a little way to go. I think staffing costs are still going to be a thorn in the side. They also operate on incredibly thin margins. They reported a margin of 2.7%, which isn't bad in an airline world, but that means there is no room for error. And fuel costs were higher, not as bad as what analysts had expected, but they are also parts of a business that works on a very volatile matrix. So with that in mind, I can see that there is possibly profit coming. There will be a lot of noise about what has happened today, and there's certainly going to be a lot of questions asked, but there is some light at the end of the tunnel.
Okay, now you mentioned ring fencing this loss-making international arm from the profitable domestic business, but we did see profitability in the domestic arm actually shrink in this reporting period.
Yeah, and that again gets back to what we'd seen at the first half of this year, that they were continuing to go on the capacity war, trying to operate at 65% of the market. It wasn't working, and you can see that in what they have two metrics they look at very closely, which is the available seat per kilometre, which basically is how many seats are taken up by per kilometre used. They finally turned that around. It was contracting, and they had too many planes in operation, and they finally saw in the back half of this year that turning around. So maybe that's why the domestic division could see upside in next year. But it is also why they saw such loss towards this year. From last year, it was a huge drop, around about 91%, and that is why everybody had been harping on that change. So that's one positive that could be seen going forward, but explains why they saw such a bad number this year.
Okay, Evan Lucas, was there more clarity around how Jetstar International is performing?
No, unfortunately there wasn't, Alicia, and I think that is the key left out division here. If you look at Jetstar Hong Kong and you look at Jetstar Japan, they are under a lot of legal issues over there. They are currently under some real regulatory problems in Hong Kong. Cathay Pacific is blocking their current usage. Also, what coming out of what's Jetstar Japan, it is also struggling along with Japanese airlines, which are really blocking their movements over there. It's a division they saw strategically as being a very good growth market. It is still not coming to fruition, and the questions will be asked around that, and that is the one part that I found disappointing. There wasn't a huge amount of clarity or any sort of change of strategy to get around those international issues.
Now, the loyalty program seems to be the best performer in terms of actually making money this reporting profit period. Are you surprised they didn't sell it in that case?
No, probably not. Alan Joyce has been very, very clear that he wants to hold on to it. The analytical world has certainly wanted to be spinning out. It is a very nice business. They saw 8% growth in membership numbers. They saw 8% growth in their finance division as well. Qantas Money's doing quite nicely indeed, and that is where, as you alluded to very clearly, that they are actually getting return to profit. It's a very nice number at $286 million, up around about 10% on last year. But I think it again gets back to that they do not want to sell off their profitable businesses just yet. They want to have some material in their back pocket if they have to react in the future. I'm not surprised because Alan Joyce has been so sort of very strong on this that he doesn't want to get rid of it. But the market's reaction suggests they're not upset with that either. So watching that space, it's one area to probably look into FY16 and 17 as well.
Okay, Evan Lucas, thank you so much for your insights.
Thanks, Alicia.
Well, let's go to the market reaction now and check where Qantas shares are performing. And as Evan Lucas said, Qantas' turnaround strategy seems to be appeasing investors. The shares are up 8% at the moment. Virgin Australia is down in line with the rest of the market ahead of its result announcement tomorrow. Looking at the market, heavyweights and BHP Billiton and CBA are lower. The Australian share market is trading lower after a lacklustre night on Wall Street. The All Ords is down 18 points, the ASX 200 index off 17. Global markets were little changed overnight as investors found few reasons to push prices either way. The Dow Jones gained 15 points or 0.1%. The S&P 500 index finished barely changed, remaining around its record close of 2,000. On to commodity markets, and the spot gold price is edging higher in the Asian session. Crude oil was fairly flat overnight in the US, and the Australian dollar right now is heading higher against the greenback quite substantially at 93.5 US cents. And that's the latest from the markets for now, Joe.
Thanks a lot for that, Alicia. Now, there's been a lot of reaction to the Qantas announcement this morning. Tony Sheldon from the Transport Workers Union is holding a media conference right now. I think we can go to that.